Not all home loans are created equal, just like you. You're special. FHA loans, VA loans, conventional loans, jumbo loans. These all sound like Starbucks cup sizes, right? But here's the deal. You choose the wrong mortgage and it can cost you thousands over the life of that loan. And by the end of this video, I'm gonna tell you which loan is right for you. So stick around. I'm Fernando, the Mortgage Maverick, and today we're going to be talking about loan types. We're just going to break it down into plain English, and you'll love it. Loan type number one, government loans. These are typically FHA and VA loans. FHA loans will allow you to put as little as 3.5% down payment. They work great if your credit score isn't as high as it needs to be to go the conventional route, and it will allow you to go as low as a 500 credit score to get qualified to purchase a home. VA loans are for our veterans. If you qualify for a VA loan, you may be able to purchase a home with as little as 0% down. That's right, that's the government and our country's way of saying thank you for everything you've done for us. One of the other beautiful part about VA loans is that you typically won't have mortgage insurance, and most lenders waive their underwriting and processing fee, making it that much more attractive to use your veteran affair benefits. Loan type number two, conforming, aka conventional loans. Now here's the myth about conforming loans. You listening? Make sure you have your ear pods in. You don't need 20% to buy a home using a conforming loan. And depending on how much income you earn during the year, you may qualify for as little as 3% down on a conforming loan. So why do most people think you have to put 20% down on a conforming loan to qualify? Well, that's because if you put less than 20% down, you may have something called mortgage insurance in your monthly payment. Mortgage insurance can either be paid up front, it could be paid monthly, or you could just deal with mortgage insurance in your monthly payments and then refinance later after you close on your house. Loan type number three is called a jumbo loan, or also called a portfolio loan. And that's because the investor lending you this amount of money is typically lending you money out of their portfolio. I like to call these loans the big boy loans. These types of loans are for higher valued properties that are above the conforming loan limits. The rules get stricter for jumbo loans. You typically have to have a higher credit score, you have to have a lower debt to income ratio, and you have to put a minimum typically of 20% down. And like I said, yes, there are certain programs that allow you to put as little as 10.01% down. Why 0.01% down over that 10%? Pretty sure it's there just to annoy me. So how do you know if you're falling within the category of an FHA, conforming, or jumbo loan? HUD is the Department of Housing and Urban Development. For example, in Westchester County, New York, the loan limit for a conforming loan is 806,500. Anything above 806,500 may be a portfolio loan. Anything lower than that could be a conforming loan. Now this varies depending on FHA, VA, whether you want to do a high balance conforming, and there's a lot of different things that kind of fall into this. But the basics are, if you're looking for a conforming loan, the max that loan could be is 806,500 based on 2025 loan limits. Quick insider note, most lenders don't necessarily keep your loan. Lenders will typically sell your loan to Fannie Mae or Freddie Mac if it's a conforming loan. They may still service your loan, but at the end of the day, the money to buy your house is being given to you from an investor like Fannie Mae or Freddie Mac. A lot of buyers don't realize that when you buy a home, that lender could sell your loan however they wish, and that's typically signed in your closing documents. If you hear someone say, "I don't want my loan sold," relax. Everyone sells loans. That's why they're called mortgage-backed securities. The most important thing is whoever you create a relationship with and work with to buy your house, you want them to have access and to be knowledgeable enough to explain if any issues happen after you close on your piece of real estate. What matters most after you close on the loan is whether your lender still services that loan, and more importantly, if your lender will answer the phone when you call. Come here. So you're probably asking yourself, what loan should I get? Well, here's the thing. If you're a first-time home buyer with little or limited credit, then you're probably going to want to go FHA. If you're a veteran, you served our country, you want to put 0% down, VA may be the way to go. If you're a big baller, making great money, have a ton of money, good credit score, maybe you splurge for that extra house and you get a jumbo loan. But that's it. Don't overcomplicate this. Just speak with a professional like myself, and I'll go over everything you need to know on what you qualify for, and we'll compare them. To continue to make this easier for you, the viewer, I've created a free home buyer checklist. Check it out in the description and download it today. If this video has helped you or someone you know, please share, subscribe, and like for no BS financial advice to make sure that you are successful in life and growing wealth in real estate. If you're still utterly confused and need a basic explanation of what a mortgage is, check out this video right now. Don't wait.